Us this morning. As a quick reminder, all attendees are muted and the videos are shut off for attendees. However, we'd still love for you to engage with our presenter this morning. You can engage in a couple different ways. The first way is by go ahead and opening that chat feature at the bottom right-hand corner of your screen. If you're on a mobile device, you'll see three little dots that you can select, more options. So you can click that and select chat. If that isn't an option that you can find quickly, go ahead and on the far right, there will be three little dots where you can select Q&A. Go ahead and submit Q&A and submit your questions for Patrick at that time. Before we begin, I'd like to introduce our expert on the call today, and that's Patrick Linnell, Director of CattleFax or Cattle Market Research at CattleFax. Within his role, Patrick watches trends within the industry, serves as a speaker at many conferences, providing insights and updates, and works with farmers and ranchers directly to understand their risk in the industry. So as a reminder, this webinar is intended for informational purposes only and is not for public or media consumption. Any opinions expressed by the presenters are their own and do not necessarily reflect those of Farm Credit Mid-America. So with that, I really do appreciate y'all joining us. We're going to get started here in another 60 seconds. Patrick's having some issues with getting his audio turned back on after our test this morning. So we're going to just pause for a moment to let him get back into the meeting and his webinar, his audio working, and we'll go ahead and get started. Thanks again for joining us.
All right, you seeing that, Micah?
Yes, sir. I think we're good to go.
All right, perfect. Well, appreciate your time all this morning. In lieu of a few minutes getting started late here, we'll go ahead and dive on into the discussion here. So I think first and foremost, one thing that we do need to clearly highlight in these markets and going on in the industry is the impact of this avian influenza, the high path avian bird flu that's shown up in several dairy herds across the country. At this point, it doesn't appear that there is any direct fundamental impact to the market. We're hearing that, for the most part, impacting older cows and not and something that they can recover from. But nonetheless, it is something that we'll need to monitor here going forward. As of yesterday, the latest case being confirmed in North Carolina. And importantly, what we'll really need to monitor is a lot of these state restrictions that are popping up. 18 different states now have tightened import rules, and the bulk of those all centered around just dairy females, not applying to all cattle, or to females coming from locations that have confirmed cases. And you can certainly see on the map illustrated above, not showing North Carolina yet. But nonetheless, you can see the clear regional spread all across the country in a lot of these major dairy regions. As I mentioned, at this point, as far as we think about impacts to the market, very minimal in terms of slaughter. You can see year-to-date dairy cow slaughter running around 24% below year-ago levels. And you can even see here as these cases of now being termed bovine influenza have popped up, you're really not showing any meaningful impact at this point in terms of dairy cow culling. And keeping in mind that last year, especially through the first half to 2/3 of the year, dairy margins were tight, cow slaughter was elevated, and now margins have stabilized, and as a result of pretty few replacement heifers in the pipeline, the dairy producer on average is holding on to cows just a little bit longer. And again, also important to note that as we'll look here later, the market really is just reacting and pricing in the worst of the news, it appears, and really just taking quite a risk-off tone. So as we still do look at the dairy herd, we do still anticipate slow and continued growth over time. And you can certainly see that there has been a bit of a decline here in the last few years. We're anticipating some rough stability as we look towards the start of this next year. And as the dairy producer on average it is a bit more forgiving in terms of their culling rate. And again, what's driving this? Well, again, the U.S. consumer is not drinking more milk, but certainly increased demand for other milk products in cheese, yogurt, as well as global growing demand for dried milk and other dairy products. We believe will continue to drive this trend, slow and steady growth over time. And add on top of that, the shift to the beef on dairy concept in taking the bottom portion of the dairy herd and breeding those females to sex semen, and simply upgrading the quality of the product or those residual animals. Just think of that Holstein steer that has always been a part of the fed slaughter, the fed cattle supply. Simply in shifting his genetics to half dairy, half beef, and upgrading the value of the animal coming out of that system. We did get the latest data of semen sales, how we predominantly drive our forecasts there. As far as the size of that beef on dairy population, it appears to us that there will be somewhere around 3.2 million head of those animals hitting the ground this year. And so as we look going forward, we believe that those composed around 10% of the fed slaughter mix last year. And again, as we see slow and steady growth, and rapid growth likely behind us for the beef on dairy, but slow and steady growth here going forward at the same time the native beef herd declines, suggests this could compose around 14 to 15% fed slaughter here over the next few years. So as we look at the drought situation throughout the country, and something that has shown vast improvements as you compare back to where we've been for a lot of places over the last 2 years or so, where during much of the time, over 50% of the nation's beef cows lived in drought condition. And can certainly see that some areas still impacted by drought, but much improved situation. And as we do think about the trajectory of the nation's beef cow herd in drought, being a major driver, and really, the states that we watch the closest is that center band of states from North Dakota down to Texas, composing on its own around 50% of the nation's beef cows. So clearly, the Central Plains, again, the drought conditions there, being a critical driver. And if you extend one more band of states, east and west, composing in closer to 70% of the nation's beef cows. In still spots of drought, much improved. However, as we look forward, many meteorologists out there raising the caution flag. As we think about those climate patterns, the La Nina El Nino cycle, and in that El Nino tending to bring more favorable conditions to the Central Plains, and the La Nina tending to correlate with drought conditions. Well, it does appear that El Nino is out. And again, this is just an illustration straight from NOAA. But again, most meteorologists, and the one that we work most closely with, suggesting a similar pattern here. As we work through spring, we're in that transitional or that neutral phase. Can tend to be pretty moist conditions, as it can be more prone to storms. So certainly positive as we do think about setting the stage for a good grazing season. However, as we work through the remainder of the year, and especially into fall, odds shifting that we do move back into that La Nina phase. So as we do think about the rebuild of the nation's beef cow herd, we still do think that it will occur, but we will need to be watching this La Nina and thinking about how much drought conditions can stabilize as we head on into the fall run, and also looking out towards the next couple of years. So as you look at beef cow slaughter, in, we are seeing some sharp reductions there on a year-over-year basis. Year to date, down around 12%. Now, important to keep in mind that that is still comparing to a big aggressive pace for beef cow slaughter there last year. And even with our forecast that would maintain that decline throughout the remainder of the year, that still would be a slight net culling pace. And just thinking about how many fewer beef cows we have out there and the contraction that we've seen, does suggest that we need to see a sharp reduction in beef cow slaughter to really, again, facilitate that rebuild. So as you look going forward, this will be impacted by the state of the drought conditions, especially as we work in towards next fall. And you do tend to see that seasonal increase, but the big question will be at what level? So as we look at the other lever in the expansion contraction equation, thinking about heifer retention. At this point, still no data suggesting to us of any widespread heifer retention. We have seen that occurring to some degree in some regions and in some individual producers. But as you do look at it on a national scale, still no signs of that occurring. And now, typically, when you get into that February, March, April timeframe, that tends to be about the last time that in the cow-calf producer can still make those decisions, again, to get these heifers bred. And those springborn heifers, in ability to retain them back into the beef cow herd. And keeping in mind that it's roughly 70-75% of beef cow producers that are spring calving. So it does set us up where, again, the next major chance to retain heifers will be from those calves hitting the ground here this spring and weaned next fall. And you can certainly see, as you look at replacement heifer numbers coming into the year with a record tight supply, we do anticipate some growth here going forward. But again, to see these kind of increases that we have forecast here will certainly be a heavy lift and will be a bit of an uphill battle as you think about the potential for drought. Still believe that prices and profitability prospects, and as you do think about a strong market here for the next several years, will incentivize the producer to expand. It's really just the rate that is the big question to us. So as a result, as you look over the next few years, do still look that beef cow inventories will decline slightly into next year. Much smaller year-over-year decline than what we've seen the past few years, but declines nonetheless. And importantly, as you look at the shape of our forecast, we are anticipating, again, that slower rebuild process. Slow ship to turn as always, but keeping in mind compared to the last cycle, we added 1 million beef cows 2 years in a row. 2 million beef cows in 2 years, and the most aggressive expansion that we've seen in history. Still not expecting that to be the case here this year. And so as you think about what this means to the calf crop and calves hitting the ground, you believe that we'll see a decline again in calves hitting the ground this year and again yet next year. Now, again, can start to see that turn as we hit towards 2026. However, you still note this is several years of smaller calf crops, and in the next 4 years, this year included, all smaller than the number of calves that hit the ground next year. So again, that does set the stage for us believing that that this calf market that's pushed to record levels can remain strong for the next few years. Again, as it takes several years before we actually see a meaningful increase there. We also did get the latest census of ag data in that every 5-year survey that the USDA conducts, and did show this continued trend of fewer beef cow operations and consolidation within the industry. You see the blue bars indicating the number of operations had actually held steady into 2017, but continued that long-standing decline and trend that we're seeing there to begin 2022. And you'll also see that do continue to see in the average size of the beef cow herd growing. Important to note that most folks would believe that the average herd size is probably larger, but important to keep in mind that it is actually around 47 beef cows. So certainly a more modest size than what folks would initially believe. Increasing as we have seen an exodus, in particular of those small, very small producers, again talking less than 50 head, and even more so less than 20 head. So as we do look at fed slaughter numbers here over the next few years. Yeah, Micah.
I know that we typically cover question and answer at the end, but I do have a question that has come in that is pretty relevant to, I would say, your last slide and what you just mentioned, if it's okay if we talk through that now.
Absolutely.
And so the question was, do you see the forcing out of small beef producers, just like they have with other small dairies or tobacco farms? Anything that you would like to add specifically based on what you just said to that question?
Yeah, that is a really good question. I mean, something I think that as an industry we all need to wrestle with. I wouldn't, from my perspective, I wouldn't see it as being pushed out so much as making their own decision that they don't want to be involved in beef cattle production anymore. And with those small producers, frankly, it's not really a profit center. You hope to make a few bucks, but if you have 8, 12, 15, even 30 cows, are you really in it for the profit, or are you in it for the lifestyle and maybe cash flowing it by your 9 to 5 job? And looking at it as a lifestyle decision, well, with the age of producer going up on one end of the spectrum, and then also just high costs, it appears that people just aren't making that decision as much. No, I think the more medium to medium large size operations, you're seeing where a lot of those are growing and consolidating, and so I think that's where maybe some of that I wouldn't say necessarily pushed out, but making that decision to grow in size and maybe consolidating operations to try to capitalize on efficiencies of scale.
Thank you.
Yeah, very good question. So fed slaughter numbers will continue declining here over the next few years. And as you look at last year, that was down over 1 million head. We expect it'll be down in not quite another 1 million head, but another 700,000 to 800,000 this year, and another sizable decline as you look towards next year. Important to note, we still do believe at this point, fed slaughter at the lows maintains above the last cycle lows, and really because we don't see quite that degree of aggressive heifer retention that we saw in taking females out of the terminal pipeline and keeping them back in the herd. But again, just something that we will need to monitor. And still, in theory, if it's a slower expansion, when these numbers do rebound, current expectation is much slower rebuild than the V-shaped bottom that we saw during the last cycle. So again, with declining slaughter numbers, both fed and non-fed, beef production will continue lower. And so as a result, per capita beef consumption will be declining as well. Again, important to note, and a lot of times, we believe this can be mischaracterized by the popular press, that this equals declining beef demand. But as we just saw, certainly it's hard for the U.S. consumer to eat more beef when we're simply producing less of it and facing the uphill battle from a declining beef cow herd. So with these declining beef supplies, however, certainly price supported, and continuing to see retail beef prices moving higher. And continue to get the question again, how much higher beef prices can the consumer stand? Which is a very valid question. But at this point, we really haven't seen any cracks in the levee in terms of beef demand. Now, and certainly thinking about the next few years, as we do produce less beef, prices will have to go higher. And unfortunately, the U.S. consumer will have to eat beef a little bit less often, or a little bit less in terms of pounds or tonnage, which certainly keeps prices elevated here. And as you do look at the competing protein, as you look at pork and poultry, still adequate supplies, and not seeing the year-over-year price increases that we're seeing as you look at beef. And as you do look at those competing proteins, still adequate in terms of production. As you look at pork on the top, again, still keeping production right around that 50-pound per capita mark. And broilers, U.S. consumer continues to eat plenty of chicken, and still looking at how many restaurant chains have been pushing the chicken sandwich. It appears that for the right price, we still haven't hit that mark yet, where the U.S. consumer says uncle, and that I'm not eating more chicken. And so certainly going forward, the U.S. consumer does have other options. Unfortunately, again, we would like them to eat more beef, but at the end of the day, they do have other protein options. So as you look at demand from a calculated standpoint, basically balancing these prices against the fact that we are just producing less beef, demand does remain historically strong. And you could see over the last year in remaining towards the upper end of the range here for the last 20 years. Seasonally did decline there into March, but still historically a very strong number. So again, despite all these concerns, both about beef demand and the U.S. economy in general, both continuing to exceed expectations. And with yesterday's CPI data, the latest inflation data coming out, coming in above expectation. And so as we do still look at the economy, and something that we'll just continue to monitor here, and certainly favors that if inflation isn't having the progress that the Fed would like to see, it does favor that it could be a slower path to rate decreases. And as we tie this back to the producer, in continuing to look at somewhat higher rates, and especially compared to the last 10 years. Now, from a consumer standpoint, it does still favor that, that there will be other places where the consumer's spending money on. And so at some point, could that become a risk to beef demand? Something that we'll just need to be monitoring. And again, another thing that we'll need to be watching is crude oil and energy prices continuing to move higher here. And again, thinking about the risks, going on in the Middle East, and the continued, rhetoric from Iran. Again, what does that mean to the crude oil market? And certainly thinking about if crude goes up, that's a major expenditure for the average consumer, filling their gasoline tanks. And so, again, what does that mean in terms of squeezing other portions of budgets? Just something that we'll need to be monitoring. And as you look at the S&P 500, and who knows where the stock market may go, and certainly took yesterday's inflation news negatively. But at the end of the day, stock market's not far from these all-time records that were set here recently. And as we do look at consumer demand and consumer optimism and sentiment, having an outsized influence by folks' 401ks, and people do tend to feel with their 401k a little bit more than they really should on a day-to-day basis. But nonetheless, I think it certainly does just reflect that in U.S. consumer in optimism has somewhat improved. compared to prior months. But again, also important to keep in mind that if we do see a solid correction to the stock market for whatever reason, what kind of spillover effects that could have. As you look at beef prices at the wholesale level, remaining very seasonal. It has moved higher since the start of the year. A bit of a correction here in the last couple weeks, and still do believe that we can see some more strength as spring grilling demand does continue to unfold. So as we look at the cattle supply situation here, looking at cattle on feed, despite what I've laid out to you about these cyclically tighter numbers, on feed actually maintaining above year-ago levels, as the industry has really pulled forward on that available supply. And also the other thing, adding more days on feed, cattle spending more time within the feed yards, coming to heavier outweights, does favor that in all else equal, inventories can remain somewhat more propped up. Still, placements so far this year, down around 140,000 head. But as you see, still keeping in total inventories still fairly adequate. And front loaded at that. As you look at these carcass weights, it had been impacted by those early winter blasts that we had during late December and early January, those cold storms that hit much of the Central Plains. Weights have recovered back and now well above a year ago, up 28 pounds in the latest data. Still believe that we will see a seasonal decline here, but still catching at likely some heavy levels, even in the spring low here. So again, in one way, just a reflection of that front end loaded supply within feed yards. Now, also important to keep in mind that as weights are heavy, does favor that the grade will remain strong. High percentage of prime and choice cattle grading today. And this does favor that as cattle are coming out heavier, and a solid percentage will still be grading choice and better. So as we look at the trajectory for prices, it has been moving higher year to date in a pretty seasonal pattern and moving up towards a spring high. We were anticipating a high up into the low 190s for this spring. Let's just say plus or minus 192. Now, the shock from the news on the high path bird flu outbreaks initially in a dairy in Texas, it did likely cause that risk-off attitude stir in the market that did cut us a few dollars short. But all in all, from a 30,000-foot view, very seasonal and more or less in line with expectation. Now, you can see the red diamonds here using yesterday's futures close, anticipating a seasonal decline as you compare this year and that shape to a 20-year index. In weakness into the summer before strengthening there into the fourth quarter. We would take the over on a lot of these current futures prices, but nonetheless, that's what the market's anticipating today. Now, another important thing to keep in mind is looking at the packer margin situation. On average, so far this year, the packers been slightly in the red. And that compares pretty sharply contrasts from where we've been the last few years, in where the packer at times, especially in 2020, 2021, saw record margins. And as we have tightened up supplies, the packer needing to fight and chase cattle more aggressively, and no longer able to maintain such strict margins or such large margins. And expect that will continue to be the case for the next few years as we still work through tighter numbers. Seasonally, we will still, however, see the packer gaining back some margin here in the months ahead. Typically, they do get the benefit of some of this spring grilling demand, And at the same time, as I shared with you, feed yards inventories above year-ago levels and front-end loaded does suggest that the packer will likely be able to gain some margin. Pretty seasonal for them to run in the black during the summer months, again during the second and third quarter, and at a break even to a loss into the fourth quarter and the first quarter of the year. Back into a much more cyclically normal margin situation compared to the last few years. And just to illustrate, the impact that we've had here in the volatility in the futures complex, and saw a severe break there last fall, and the market recovering a vast majority of that. Now, however, again, as we did have both a couple negative on-feed reports, and then again, this outbreak of high-path bird flu, the market has reacted negatively to that. And again, you could see the break that we've had in the futures complex. So as we look going forward, the supply of feeder cattle outside of feed yards does remain tight. And so as we think about feed yard placements in the next few months, as a trend, we'll continue to run below year-ago levels, with that outside supply down close to 1 million head from year-ago levels. And that's certainly reflected in the feeder cattle market as well. As you look at the CME feeder index, so basically an 8-weight steer in the Central Plains, and remaining well above year ago. I mean, look at the white space so far this year, and trading in a very seasonal pattern here as well. Now, looking forward, can see a bit of a pullback, which is not uncommon here into April and May. But certainly, as you ahead of this break, would have suggested that in prices more or less moving forward, or moving in a steady range. Now, as you do look in towards the late summer, do expect that seasonal rally will take place. Futures at this point, currently only priced on par with year-ago levels, but do expect that, again, as we do get closer to that time frame, the market can trade firmer yet. Ahead of this break, futures were trading in that plus or minus 270 to the low 270 area. And to us, that seems like a fair target, based on what we know today, and assuming that a lot of the fallout of the bird flu situation does pass. And you can certainly see, again, the break to the feeder cattle complex as well. This is just looking at October feeders. And with the rebound since last fall, it had been trading in that low 270s area, and then breaking lower and taking a pretty substantial hit, breaking down closer to this 250 area. So as we do think about it, again, from a marketing standpoint, as we do approach these summer video auctions for calf sales, or towards those summer yearlings coming off grass in the latter part of the summer, do expect that we will start to see some recovery taking place. However, we'll just have to wait and see the extent. And as we do think about those levels in the 270s, we were encouraging our producer membership to look at some price protection, whether it's via futures or options or LRP. But with the break that we've had in place today, don't believe that there's nearly as much risk that we're managing by adding new coverage here. And so at this point, we're in a holding pattern. And important to keep in mind the seasonality of the market as well. I shared with you the cash seasonality. The seasonality of the futures also favors that the bias does tend to be higher as we work in towards that time frame. As you look at the calf market, or the cold cow market, has also been on a tear and moving up towards record levels, with our U.S. average price for a utility cow up around 132 the last couple weeks, and right on par with that seasonal price pattern. Should remain stout throughout the remainder of the year. Certainly likely to see some seasonal pressure into the fall, but nonetheless still up towards high levels. On average for the year, expecting cull cows to be up about $20 per hundred. And also, as you think about just the swap, for folks that are looking to, potentially, drop down the age of their cow herd, these cull cows are stout. And so is there some opportunities here to cull just a little bit deeper into the herd and replace them with a bred heifer or younger bred cow? And as we look going forward, expect these cull cows will remain stout, predominantly because in the product or the value of those cows on the product side is extremely stout as well. 90% lean trimmings up at record levels, as a function of both beef cow slaughter and dairy cow slaughter being down sharply. And you even compare these cull cow prices to a fed steer, pressing the bounds in terms of history. Just a perspective on how stout these cull cows are. So as you look at the calf market, very seasonal as well, pressing up towards record levels or into record levels, with our U.S. average price just knocking on 330, and right in line with the seasonal index. Again, as that supply of lightweight calves dries up, at the same time that demand is the hottest, as green grass fever again taking hold. Still do think that there is some seasonal risk as you hit towards the fall run. But again, fewer calves than a year ago does imply that in calf prices, as we do look in towards the fall, should be above year ago levels as well. I expect they should be supported in plus or minus that $3 mark. And so from a macro standpoint, in this this story that I've outlined and that we continue to believe of tighter numbers in the years ahead, does favor that cattle prices across all classes will remain strong here as well. The important message, however, is that the big year-over-year gains are for the most part behind us, especially as you look at the fed cattle market, and certainly feeder cattle and calves have pressed up to record levels now. But again, the big gains being predominantly behind us, but still looking at a firm market. And keeping in mind that the slower the expansion unfolds, the more years of this generally strong market. And if it's a slower expansion, it does favor that sharp drop off that we saw in the last cycle won't occur to that degree. Certainly need to be monitoring the demand side of the equation. But at this point, again, as long as the U.S. economy continues to outperform expectation and continues to hold firm, certainly supportive from that standpoint as well. So again, profitability, as you look across the industry, continuing to move back to the cow-calf segment after some pretty tight years. And still do expect that the next few years will still favor margins for the cow-calf segment. And thankfully, again, given some opportunity to heal up these balance sheets compared to what we've done over the last several years. And also a key message that as we look to folks, still don't believe that, again, it's not too late to expand in terms of the cycle. There's certainly the best time to expand was over the last few years, again, to gain that equity appreciation. However, don't believe it's too late, but certainly folks do need to have their own opinions as well on just how expensive is too expensive, whether you're purchasing outside females or retaining those females from within the herd. So with that's the information I have for today. Is there any other questions?
Patrick, we've got quite a few to get through today, if you don't mind. A
Yeah.
lot of questions around bird flu update. I think you covered that in the beginning, but seems to be right around 7 or 8 submitted questions just specifically about that. And so,
Oh
with
boy.
the significant interest in that, is there anything that producers could maybe be keeping an eye on to kind of help them with understanding what's going on, latest updates, or what are the trends, I guess, that you're watching around kind of this impact on the industry?
No, very good question, and one that we're getting a lot from folks. Um, as far as the impacts go, at this point, it's mainly appears to be just a fear of the unknown as far as market impact. No, we do need to be watching these travel restrictions, and what that could mean, especially if those do extend to feedlot cattle or feeder cattle or beef cows. Because certainly, if cows can't leave us, if cattle can't leave a state, that does severely impact their value. And so I think that's something we'll need to watch. We do need to also be watching in consumer sentiment. Um, at this point, even the popular press has done a really nice job of being very factual and not excitable. Yeah, that they've been clear that um, just don't drink raw milk. That pasteurized milk purchased commercially is still safe, and same thing with beef. That it's not impacting the beef supply, the safety of beef or milk. But again, you just never know what the perception ramifications might be. And so again, we do also just need to be monitoring that in terms of is there any threat to beef demand? Again, at this point, it doesn't look like it. The messaging has been very factual and good, but you just never know. We'll also just be watching again, is there any fallout from a culling rate standpoint, either beef cows or dairy cows? Again, as I shared with you, that's not the case. Does it end up in the beef herd or in feedlots? Something we'll need to watch. And it doesn't appear that there's any health fallout to calves. Have not seen any cases even in calf ranches. Because again, for whatever reason, it's tending to impact older females. I
Another
think if, uh, I guess one other comment that again I would make from it is, you just never know when things like this take place, and even in strong markets, you can have things like this that spook them, and that's just why we do like paying attention to opportunities for risk management and think that there's ways that again folks can take advantage and secure secure solid margins and protect against things like this.
Another question that we've had 3 different responses on was around kind of the global impact, if you will. So I'm going to read 2 of these, and you can take pieces out of each of them as to how you're going to answer. But how will overall economic trends nationally and globally affect cattle markets, such as inflation, unemployment, disposable income? You talked a little bit about that in your presentation. But I want to follow that up with this question of what are the chances imports will be used to deflate the bullish prices that maybe we're seeing today?
Yeah. So as far as the broader the U.S. economy, um, I think many of us have been cautious in our expectations for the U.S. economy, but it's and for the past year, it's defied expectations, and so I think that's kind of the assumption that we have to run with until proven otherwise. There's plenty of risks out there, and at the end of the day, it really is consumers' disposable income that really matters to beef demand. So even if it is a mild recession that we end up hitting at some point, um, then expect a mild impact beef demand, and you really have to lay out that case for a severe recession to see a severe impact to beef demand. Is kind of the simple way to look at it. And again, that I like the mantra that economists have forecast 8 of the last 3 recessions. So we can always talk about recession risk, but it's really hard to expect it until you actually see it unfolding. Relative to the global question, I'll start first on the export side. We have seen exports drop. They were down around 8% last year, expecting another 5% or so decline here this year. But not because there isn't global demand for our product. There still is. We're the largest producer of high quality beef in the world, and really the only one producing it at scale. And in particular, into the Asian countries, they just love the product. And so it's more the fact that we're just producing less of it that's constraining our export business, more so than any true weakening of demand. If we had it, they would buy it. Now, to the import side, we've absolutely seen a move higher in imports. And that's, even with that, we've seen prices move towards record levels. Certainly can, all else equal, do imports constrain prices? Yes, because it is bringing just more product onto the market. But I think, to us, it doesn't overweigh any of these trends in terms of just our own tightening domestic production. And especially the fact that we are a hamburger nation, and a lot of what we're bringing in is those lean grinds to fulfill that demand. I showed you the declines in beef cow and dairy cow slaughter, and so a lot of that product being brought in as grinds to fulfill that lean grind market.
That's a perfect lead into this last one that I want to ask, Patrick. It says cattle numbers shipped and transported into the U.S. and box beef. Are standards for that beef maybe less than what the standards are for U.S. producers, and why? Well, based on your last question, I almost think you're suggesting that it's really just filler beef that's being imported to be able to meet that demand. Is that fair?
Yeah, first and foremost, it really is. I guess to use your term, Mike, filler beef. I mean, it is lean grinds. We do see some grass-fed product being brought in from Australia and New Zealand, because that's not the most of our beef production or consumption, but there is maybe, I guess you could say, a little bit of unfulfilled demand for that product based on our domestic production. But it's vastly secondary compared to just lean grinds. Now, the important thing to note is that the food safety side of it, and where that's just critically important, that beef imports are held to the same food safety standards as our own domestic production, which really does, again, with the Paraguayan beef, and some of that, that opening up, you have seen where there's been some pushback from that standpoint. And at the end of the day, I'm not a food safety policy expert, but certainly do recognize that we do just need to make sure that in countries that we are importing beef from are brought to the same food safety standards, because we don't need any beef safety risks that make the consumer question the safety of the product they're eating.
Well, we have come past time, folks, and so I do really appreciate everybody joining, but to be respectful of everyone's day and time, I want to make sure that we close up this webinar. Again, this will all be recorded and sent out to everybody that registered. And so if you want to go back and revisit any of the slides or graphs that Patrick shared today, you're welcome to do that. You'll also notice on the screen is his email address. And so one thing that I love about our partnership with CattleFax is that Patrick is always willing to field questions and discuss one-on-one with any of the folks that maybe want to dive just a little bit deeper. And so thank you all so much for joining us, Patrick. We appreciate you, and we look forward to seeing you next quarter with another update. Thank you all.
Perfect. Thank you all for your time.